Good afternoon, everyone. Welcome to the next panel. We're going to start with a quick round of introductions. Christine, would you like to start?
Hi, hello everybody. So Christine Hockley, I'm Managing Director and Co-Head of Funds at British Business Bank and also Managing Director at British Patient Capital. So British Business Bank is the UK development bank, and we have a permanent capital base of 8 billion, which we leverage off, and we invest about 600 million into commercial opportunities each year. We're the largest UK investor into UK venture and also the most active investor into UK deep tech and life sciences. So through British Patient Capital, we're invested into about 80 funds and work with about 45 fund managers. And we do that via our 2.5 billion programme. We also co-invest, and we have 425 million that's invested directly into deep tech and life sciences, and we have very specialist teams that do that.
Thank you. Pierre.
Hello everyone, so I'm Pierre-Emmanuel Struyven. I'm managing partner and CEO of Supernova Invest, so it's a French-based European deep tech investor. We've been on the market since 2017, but we come from a background of being a kind of a corporate venture arm of a public research institution called CEA, and we get our deep tech DNA from those origins. So right now we manage roughly 800 million euros. We invest from seed to late stage, European-wide, and we are diversified in terms of sectors, from healthcare to digital tech, energy or climate tech, let's say, and industry tech. We're always looking for great startups across these maturities, and currently we recently developed a more vertical fund around agri-tech and food tech, but all our other funds are more generalist, as I said. And personally, I'm an engineer who turned into a finance person, and that's also where I get my taste for technology, I guess.
Thank you. And lastly, Daniel.
Thank you. My name is Daniel. I'm working for the European Investment Fund. We are actually, as we read all recently in the news, one of the biggest, or if not the biggest, LP limited partner in European venture. We invest across both venture capital as well as lower mid-market funds. In the venture space alone, we have invested into close to 700 funds across all different kinds of strategies, from life sciences to deep technology to the traditional ICT strategies and green tech strategies. At the EIF, I'm heading the scaleup unit since January, which is the unit that is catering for the funds focusing on Series B+ up to IPO.
Thank you. And then lastly, my name is Jonathan Hollis, and I'm the MD at Mountside Ventures. We run accelerators for founders and recently launched the first accelerator for VCs in Europe a couple of months ago, supporting 20 emerging managers through mentoring, LP connections, and generally fundraising workshop. So working very closely with the next generation of VCs all over Europe. And actually, we had 500 funds apply, and believe it or not, deep tech was the most relevant and also most popular sector chosen by the next generation managers. So a quick bit of context. So let's jump straight into the content, given the wealth of experience from my panelists. And let's begin with looking at what some of the main challenges are within the deep tech space. Who would like to kick us off on who can name, in their experience, some of the big challenges facing the sector?
So yeah, I can kick us off. So yeah, I mean, I think deep tech is almost a kind of emerging and maturing sector, and I think particularly this is about the sort of growth stage. So we're starting to see those growth stage companies sort of come through. So I think looking from a fund's perspective for a minute, I think what we would like to see is more capital out there, so more funds focused on later stage deep tech as those companies mature and come through. And I think the skill sets there are very different to normal sort of tech funds, and very specific deep tech skills are needed in investing in this area. So I think we would need to see more of that, and almost it's company building type sort of qualities and skills that are needed, which is very different from what we see on the tech side. So as we look at our portfolio, we've been investing since 2018, and we would like to see more deep tech funds in that. So we're specifically prioritising deep tech funds at later stage as we look for those new managers, which we always do to build up on that. And then looking at our direct team side, again, I think more investors. It's an area where finding a lead investor, bringing syndicates together, it's a challenge, and so more investors to come and be able to have the skills to support these businesses is something that's needed, I think, throughout the ecosystem.
Got it. So more more skills, more investors, and more capital. Daniel, do you get anything you think is missing in terms of some of the challenges facing the industry?
I think there's also a positive aspect to what Christine just said, which is that if you look at how deep tech has evolved over the last years, and also if you look at, for example, the climate space, where we see a lot of additional companies being started in the hardware space, this gap that we see in the growth stage has become extremely visible. And that is something where I would say all the deep tech companies are just going to profit from, because there is a general sentiment in the industry, in the venture industry, that we are lacking scale-up capital for deep tech. Yeah, and I think that is actually very positive. I don't know if you...
And do you think that's specific to deep tech, or do you think that's more wider?
I think it is definitely a wide problem. I mean, in general, you can say scale-up capital is a huge problem in all markets. There's a general underfunding. But in the past, the hardware part, the deep tech part, was not really on the map. Whereas through all the things that have been happening over the last years, where you have a lot of early stage funding that has come to maturity, where you also see some companies failing because they actually cannot get the capital they need, this is actually making profit the entire sector, but also the deep tech part.
What about you, your experience? But you're actually investing in the companies. What do you think?
Yeah, I'm framed by potential LP, so I think I hope I don't miss my exam today. I'd like to start by saying that we have to take the deep tech companies to the growth stage first, and there are a couple of roadblocks there. And in hardware, the industrialization step is always quite a difficult one because it's capital intensive, and it's also a completely different skill set for the management of the companies than the earlier stage skill set. So when we move to growth, there is usually, of course, the company will grow, but it will also transform itself, and it will need a new skill set, as I was saying. And I think that the investors who are investing in deep tech need to understand not only the technologies, the markets, but also those transformations that are very difficult and very deep. And that requires a lot of money, because you have to build your plant, you have to develop your commercial network, you have to fund your commercial funnel. And so indeed, there are too few growth, deep tech focused funds on the market. So as I said, we started our deep tech path back in the 2000. The management company was founded in 2017. We were a seed investor, and we started to do a later stage in 2021. And so we're going to have our second fund probably in 2026. So, and there are not many on the market. So, indeed, we need more co-investors, because we don't want to be alone. VC is a syndication game. We need co-investors. So we're looking forward for funds who understand the deep tech, who have enough money to invest in growth. And there are not so many. There are more on the life science because that's an older story in the life science and pharmaceuticals sector. But the other sectors, industrial, the interest is fairly recent. And if I just draw one sector which was totally invisible before COVID, it's microelectronics. If you cut microelectronics, nothing works. It's really the ground we're sitting on. And there was no knowledge and no interest for that sector, neither from the financial press or the public authorities, etc. And so the interest grew very big because we saw the importance of it through COVID, because there was a disruption in the distribution chain, in the value chain, and now there are more and more funds that are looking specifically at microelectronics, and it's a good thing. But so there are new subsectors in deep tech that are emerging as important sectors to cover for the global economy. It's a question of economy. We're not just creating new stuff. It's the basic needs of the future economy.
So we're broadly in agreement that we're looking for more co-investors, more capital, more deep tech specific skill set. Why do you think we haven't reached the kind of a reasonable level yet?
I mean, I think this is a pattern we've seen before. So British Patient Capital was set up in 2018 to fill that later stage gap that we saw. So we did analysis. If you looked at the UK as it was versus the US, on a like-for-like GDP, then there was a lot more capital going in at that later stage than there was in the UK. It's the same in Europe. So there was a sort of a gap in that capital. There were also more deals being done as well. And actually, as we look from 2018 to now, there are a similar number of deals being done, but the gap is still there, but it's slightly less. This is sort of on general tech. And I think, in 2018, we were targeted on later stage growth, and we wondered, where were the funds we were going to deploy it. But of course, the ecosystem matured and the market delivered, and now we have lots of growth stage there. And I think deep tech is particularly challenged in that gap in terms of funding is wider. So you might get 2 times more in the US for normal tech. It's probably more like 3 or 4 times for deep tech. But I think we are seeing that maturation coming through. So it's a pattern we've seen before. So I think it's part of the maturation. It's part of us all kind of acknowledging that problem and addressing it through the various ways that we can, or EIF can, or other areas, and then bringing in and helping more institutional investors to actually understand the problem and actually understand what the actual opportunity is, which I think is an amazing opportunity.
So you don't think there's a specific problem? It's just it takes time for the markets to develop. Is that your position?
So I think there is an issue, obviously, because we're all talking about it. Yeah. There's a gap, but I can see that the market is starting to address that gap. We still have a growth gap in tech, but it is closing. We have a much bigger one in deep tech, but equally I could see that things are going. So there is light at the end of the tunnel, I think. Yes, I agree.
I think there's been a lot of initiatives, much like the initiatives around the panelists. Daniel, do you
I want to react to what was just said. I think if you look at the deep tech space in general, and if you look at how it looked like 5-6 years ago, there was also there was a very small community of deep tech investors that were really in investing in the space. If you look 6 years later, this overall sector has matured so much. You find so much in the pre-seed part, in the seed part. You find a lot of Series A investors. It is just this overall ecosystem has half the time to mature into something where you actually also can start to see first vertical focused growth stage funds. And there we're not yet. On the other hand, I always need to bring in the perspective of where have we come from. I mean, if you look at it at the EIF, between 2021 and 2024, we invested in roughly 50 growth stage funds across all verticals. Those 50 growth stage funds got funding of roughly 3.5 billion from the EIF, committing. And those funds, until now, so 4 years down the road, have raised about 15 billion of total commitments, which means actually there is a lot that is happening in the space. Yeah? We even expect those same funds, until they actually close the subscription period, to raise something closer to the 30 billion. And this money will be money coming from Europe, going into the European ecosystem. And then if you then go back to what that means for the deep tech ecosystem, the deep tech ecosystem simply in the past wasn't where it will be in the next 2 to 3 years. You will find a lot of companies that will be breakout companies, that will be scale-up companies. And our GPs, in the end, they're money allocators. They need to allocate the money where they get the returns. And if you have those breakout cases in the deep tech space, I'm 100% sure they're going to go for them.
Yeah, absolutely. Oh, and I guess I think I also agree with what Christian was saying around the maturity of the market. The reason I was trying to get it narrowed down into some of the underlying issues is, of course, when we're thinking about solutions to it, we need to understand the underlying cause of it. And so I think as the market matures, as some of the initiatives that you're doing come to fruition, of course, the entire market then shifts, and that gap is reduced. Pierre, you talked about the skill gap around from A to B into growth. Can you expand a bit on that and what your thoughts were?
Yeah, I just want to comment on what you just said. So it's good that we have these sovereign funds helping the development of the GPs in the deep tech space, but we also need other kinds of investors to join the table. So the institutional, family offices, and the likes, and even the public through the various savings systems we might have in each country, and that is where we need a full cycle of education of those investors who don't know specifically what deep tech means. They understood tech, but that was a lot about the usage. What we do is slightly different, more industrial. So there is also, we need those successes of growth companies. We need exits at all stages. Not some companies will never get to the growth stage. They will do exits before. And so this conviction that deep tech is important has to go to the other types of investors, and this has to become like an asset class that is as desirable as investing in more low tech or even infrastructure or whatever. So we need all types of investors to kind of find their way into the deep tech investment. I come back to your question about the skills, so it takes time to build a team. And even with AI out there, we're still relying on our teams and our tech partners to help us with the due diligence process and the follow-on of the companies over the detention period. So we have most of our investors come from a dual background, finance plus engineering or PhD or science degree. Our most distinguished technologist has no science degree, but it's kind of the exception. So yeah, we tend to look at investors who have a background in technology and also who understand the markets they will be operating in, and who have experience also in startup or corporate environments, because I think that there are many roadblocks on the road of the startups and scale-ups we're investing in. So it's important that our team understands, and if you've been there before, it's easier. But nonetheless, we also have trainees, and we hire them afterwards, and we love them. But it's good to have those type of skills in the team, and then we have to build a network of partners who are able to help us during the life of the startup to address the type of issues they will have. I mentioned there is IP, lots of issues, not issues, but opportunities and things to look at for your IP strategy, IP portfolio, freedom to operate, etc. I mentioned the industrialization. That's very important. deep tech scale-ups are usually operating on a worldwide market from day one. So they need to build a commercial network with partners. So the notion of partnership, etc., is very important. And we try to provide counseling to the startups through the board, but also outside of the board. And so I think the value proposition of the VC is always, there's a lot of talk about that, but I think that in deep tech you really need to get your hands dirty, otherwise things will not happen just by putting your ad on Facebook.
Yes, I guess we need the deep domain expertise from investors who understand what they're doing, and who can then provide value. And of course, as Tony also mentioned, we also need the exits of these companies to then provide liquidity back to the funds and then generate more interest from LPs. What else can we be doing to, I guess in line with the topic of the discussion, bridging this gap that we see at the growth stage within deep tech? Are there any quick fixes, or is it all long-term solutions?
Yeah, I mean, just to take your point on we need exits. Of course, we need exits, but these businesses need patient capital. I think that's the key. They're not businesses that you can turn around in 3 or 4 years. They need patient capital. They go on a very winding journey. I think, as Pierre has just said, they sort of pivot from all over the place, but because of the types of, I think, businesses that they're building with this really R&D intensive area that they're looking at, and where is that market? You're building a technology, but actually finding that product market fit can take some time to do. So I think it's important that there's patient capital there, and I think there's an education there for investors. So, we have patient capital, and in fact, we've just announced a Series F funding into Quantexa, which we went in at Series C. So, we've shown that kind of patient capital funding that goes alongside building these big successful businesses that are unicorns, and I think we need to see more of that. So, there's an education piece to, I think, sort of private investors, to bring them alongside to actually understand what this deep tech asset class is really like, and I think it's incumbent on the GPs to kind of show what that roadmap looks like and where those inflection points might be, a little bit like we have on the life sciences side now. Nice.
Education absolutely is definitely one. Are there any other fixes or solutions you see, Daniel?
I'm actually a bit skeptical if there will really be quick fixes for this. I think first there is obviously the market that needs to develop into a direction where there is more growth capital for deep tech, yes. But on the other hand, if you look at the market, there are lots of initiatives that are undertaken to make our market more competitive. The EIB is massive when it comes down to venture debt programs. These venture debt programs typically go into deep tech companies. The EIC is out there and writes small but also relatively large tickets. There is a private credit market that is developing. I would rather say it's about getting the tendencies right now, and that includes obviously regulatory and other measures that are taken maybe on a policy level. But then it's also about, obviously, as you said, Christine, getting the pension funds to invest, private institutions to invest in the sector, educating them under whichever form, if that is under fund of fund programs or others. But in general, this will need time. This is a very big ship, and this is going to gradually change. We will not be able to change that from one day to the other. Whereas, right now, I am actually extremely positive because there is a huge momentum. Europe is actually reeling to build something together. That is at least my real hope, and I feel like the right momentum for that is just right now.
And sorry, in the UK as well, there's the Mansion House Compact, which is bringing pension, or looking to bring pension fund money into the private asset class. Some of which will go into venture capital. And actually, when you talk to the pension funds, it's the sort of R&D intensive deep tech type assets that they're really interested in. And in fact, our last fund that we've announced is an investment into Cambridge CIC, Cambridge Innovation Capital, for their later stage opportunities, and that's alongside Aviva, very large pension fund. So I think, I agree with Daniel. There's momentum building here, and momentum building from large pools of private capital as well. So it's quite exciting to see that bubbling through.
Absolutely, I was excited to see that announcement. Actually, they're a firm based in a region in the UK with some great backers, and maybe the pensions within deep tech are maybe a slightly lower hanging fruit, because deep tech companies need more funding. We have a growth funding back, and of course, pension funds have a slightly higher ticket size, and so naturally, I suspect a lot of the pension money coming out of that those initiatives will be going into growth funds as opposed to just early stage funds. What are we doing well in Europe? We heard the panel earlier. For those in the room, there was some positivity around Europe. We had Project Europe announced 2 days ago, all over Twitter, with hundreds of founders now committing into building out the next successful batch of founders, which was great to see. After a lot of posting around US versus Europe on X recently, there's been a lot of negativity around it for those following. And so turning it back into a bit more of a positive light, because I agree with your position, I'm very bullish and enthusiastic about the future. What do you think we're doing well across Europe?
We've talked about the LPs, but we can look also at the other end of the cycle, which is the exits. We need education on that side too, because in deep tech, the majority of the exits are strategic/M&A exits. And so we need in Europe corporates who are willing to collaborate with startups, customers, development programs, and eventually buy them. If you take the startups all the way through the journey to profitability, etc., you can hope you will sell them to a fund, a private equity fund, and we had several experiences of doing that. But majority is, I think you will agree, is corporate acquisitions, and so we have to develop the proximity between the corporate world and the startups. And that is also a journey that is taking place right now, where we see more and more corporate ventures investing in funds or co-investing with us. And they do that for, open innovation type of goals, also to get closer to companies they need for their businesses or for their operations. But I see it also as a good sign that actually they're willing to do what actually the pharmaceutical sector did well, which is to outsource part of its innovation strategy to startups, and then buying them to make the product and distribution path internally in the big pharma companies. So I see it as a positive sign that the CVCs are bubbling, and it shows an interest of the corporate into the deep tech startups, but it's also a challenge and a mid to long-term journey to take them to be fully aware of how you integrate a startup, because we need successes, as you said. So we need companies that break out with their products on the market, etc. But we also need these acquisitions to be successful and to deliver the value after we did the exit and got our money that we can then pass on back to the LP.
So you're positive about corporate involvement. What about you, Christine? Anything that the UK is doing well in the space at the moment?
I think we're great at innovation. I think we've got a really fantastic building block. We've got some of the best top 10 universities in the world, and so actually creating that innovation, the the research, the R&D intensive businesses, we're really great at that, and we're getting much better at commercialising it. So, you know, I think we're very good, aren't we, in Europe at saying what's not great,
playing
but
down,
actually,
yes.
yeah, playing ourselves down. But we should really, you know, pat ourselves on the back. And we've also got a culture, I think, growing through of people who want to be entrepreneurs, who want to be innovative, who want to build great businesses, and that's what we need. So, you know, I think within Europe, that's what we're seeing coming through to this growth stage. And I think as we get the skills to learn how to build the companies into really, you know, big successful businesses, then I think, you know, we should take time to celebrate the innovation that we do have in Europe.
Yes, I agree. I think we've also got some great government institutions supporting the industry. I think that's also one of our strengths. You know, you're great examples of that. What about you, Daniel? And what are we doing well?
So I think what we didn't talk about is obviously this translating science into commercial, and I think there Europe as a whole has actually shown strength over the last years, and there's a very positive development in that. I just last week I saw figures that Europe actually attracts 1/3 or roughly 30% of the funding in the early stage worldwide for European companies. That includes the UK. Then if you go to breakout, it's still 20%, which actually gives me a lot of courage that actually we are developing in Europe very interesting technologies. But then this figure actually dips to 10% for scaleup, which actually also tells me, well, there we will need to do much more, because in the end, we cannot be okay to just develop and do the good research. We actually need to commercialize that and also make those companies grow out of Europe in our very own interest. So I'm very positive on the early stage side, and the fact that we actually managed to attract early stage funding not only from Europe but worldwide. But we need to do more on the growth side. That's for sure.
A few questions, and if you could at the back put the Slido slides back on, and feel free to ask questions. Thank you for those who have already. I'll go to you, Daniel, because you mentioned the word scale-up again. One of the questions is, what is a scale-up by your definition?
Well, the way how we define it is actually based on series. So we are investing, I'm talking about scale-up funds, those are funds investing as from Series B+. Those are typically companies that are not yet profitable, at least not profitable on a longer period, but that are scaling up drastically their operations.
Thank you. We talked about the maturity of the market and education, which I think we can agree is still needed, and I think German VC education is needed across all those investors. One of the questions is, do we have enough time to wait? Because of course it's a 15 to 20 year game. That's the new 10 to 12, and even deep tech might be even longer. Is there enough time to wait that long before the industry develops?
Well, I don't think we're waiting for that matter, because the healthcare sector has been there for years, so I think it's pretty well developed. Microelectronics also and digital tech is very active. There are new subsectors. Of course, defense is pretty. I won't say hot right now, but it's a growing sector for defense, and Europe has very good defense corporate and big groups, but also a lot of startup initiatives or dual technology that can be used both in the civil world and also in defense. So I don't think that we're waiting. I think that we are in the need of accelerating what is happening, but the curve is there, but we really need to accelerate. We also need to keep our startups and scale-ups here, which means that there are some barriers that we need to lower in Europe, because unfortunately some things are easier to do outside of Europe than in Europe, for instance, from a regulatory point of view. And we get comments from startups a lot about that they want to go to the US to do their product commercialization first, because the barrier will be lower when it takes to crop treatment, for instance.
And I think to just second what was said just before, we have not been waiting for so many years. I mean, all of us have worked on the market, and we have installed very large new growth programs to actually make these huge tickets from European GPs trickle down to European companies. And I think right now we are at the moment when you actually can start seeing that. I mean, out of the European Tech Champions Initiative, we have, since it was installed 3 years ago, we have something like 20 companies in it that have received close to 1.7 billion in funding. It is just not very visible, but it is there.
Yeah, I can testify. I think it was 2020 or 2021. There was an initiative here in France called the TB Initiative, which was really trying to target the need for growth funds in general. And they linked to the institutional investors, and that really helped us to actually get connected to those investors and just get the door open to new managers or emerging managers or deep tech managers that were a little bit different from the animals they used to see. And that helped us a great deal to actually get in our roster of LPs, new LPs that come from a more standard and institutional world. So it's been going on for at least 5 years, where everybody has done a big effort. And as you said, the research world has been producing interesting and very valuable deep tech startups for at least 10, 15 years, even more. And they are getting slowly coming to the growth stage. Of course, some of them get acquired, some of them die. It's a funnel, but we're really getting there. I don't think we've been slow, but we have to accelerate, so it's different.
Thank you. This is a quick one. What's the stance on defence tech for Daniel and Christine, for your respective organisations? Are you happy with it? Worried about it? Do you invest in it?
Shall I start? Okay. Yeah, we have been. I mean, in the past, we were already investing in dual use. So that has been part of that has not been a restricted sector in the past. Obviously, in light of the current evolution, we as the EIB group have been reconsidering how we approach defense. So in the future, this will go way beyond what we had done in the past. But so far, ammunition and weapons will not be part of what our funds can invest into.
Thanks. Christine?
Yeah, so dual users, yeah, we've been investing in it for a very long time. We work alongside the National Strategic Defence Fund, and they're always looking for companies or funds of interest for national security, which goes across cyber, all sorts of things. But in terms of munitions, etc., it's not something that we've
got it. I think that's a reasonable position. I'm sure people would agree. So there's a few GPs in the crowd. So deep tech funds maybe raising, and you're also presumably looking for LPs, and we have two of the largest in Europe in the room. What advice do you give to emerging deep tech investors, or more established deep tech investors that are looking for money to solve the challenges we talked about of getting more investors into deep tech? Any words of wisdom or quick insights you can provide?
I think when we're looking at any fund proposal, as I said, we are looking for to add new managers in later stage deep tech to our portfolio. But as with anyone coming to see us, we have our list of criteria. But we're looking for a great team. We're looking for a good track record. We're looking for people who can obviously raise capital alongside us and just to demonstrate that they have a honed investment strategy that they have the skill set to deploy.
Super. And is anything on top that's deep tech specific, or do you treat a deep tech fund like an agnostic fund? You know, as you say, they have to have a great team, great track record. Is there anything extra they need?
So I mean, we're sector agnostic, but as I said, we would prioritise a deep tech strategy. So it's not as though we are particularly looking for different sectors within deep tech.
So you get bonus if you're in deep tech. What about you? Any words of wisdom or tips for deep tech funds in the audience?
I'm actually asking me if what I want to say is really related to deep tech funds or in general to fund manager pitching to the EIF. I think in the end, when you come and pitch, you need to be genuine in what you're actually proposing as a value proposal. And that means you need to know exactly what you're doing, what your vision is, and you need to have done it as well. It's not like we're obviously investing in first-time teams, we're investing in emerging managers, but we need to see some kind of track record. And be it now in an adjacent field to, if we circle back to deep tech, if in an adjacent field to deep tech, but we need to see a genuine proposal that goes back also to the specific skills that the team has actually, or skill set that the team has shown to prove right in the past. So that's super important. Be genuine.
So if it's a deep tech fund, they need to have, they need to show evidence that they know what they're doing in a genuine manner, as opposed to just jumping on the bandwagon of the sector of choice that's of interest.
Yeah.
Sound advice. Pierre, back to you. You talked about corporates earlier and their involvement, and one of the questions was, how should we educate corporates in looking at deep tech as a whole? What can we do to promote more M&A? In this area. So if you had the CEO of one of the largest corporate in Paris in front of you, what would you tell him or her to get them more excited about M&A activity?
Good news, I've done that before, so
great.
I can try to summarize it here. Well, I think that I would take a look at my deal flow and also look at my portfolio and at the exits, and I would try to illustrate the fact that every single corporate has basically two types of issues. How am I going to develop in the future, new markets, diversification, etc. And startups can be your eyes in those emerging or future markets. It requires a little bit of money because you will invest, but you get incomparable feedback. And I was heading a CVC before, so I can say it's for real. When you are on the board of a startup, you're really close to a startup, you can really see what's happening in the sector much better than by looking at diverse studies or just making paperwork. On the other side, you have actual problems with your plants, your factories, all your operational processes, and you want to be better on that side too, and there are solutions there, be it AI, robotics, new materials, non-destructive control. Well, we have solutions from startups for almost every type of problem a large corporation can have. And even if you look at more distant corporations such as, let's say, the luxury or fashion business, they have huge problems they have to solve with regards of carbon, water consumption, energy consumption, and there are startups working on those subjects and that have valuable solutions. And I think that most corporates now know that they have to look at startups, but it doesn't go deep into the organizations. It's a team up there that has sometimes a difficult time to be connected to the operational levels, to the R&D, to the biz dev, and they have to build that network inside their company. But it's possible, and we see it more and more, and corporate VC are a good way to do that. And I just heard this morning, good corporate VC survives 2 changes of CEOs.
Yes, I don't know how many how many do actually? I think that's one of the key issues when you're pitching to a corporate, both of a VC or as a startup. So I don't know, I would be interested in the percentage that survive 2 changes in management team. But thank you. I'm convinced. Where do I sign? Last question, and last comment of everyone. If for those in the audience looking to get in touch with you, Daniel, what's the best way? Do they approach you directly? Should they approach your team? Or do you prefer a warm introduction?
I think all of this is possible.
What's your preferred route?
The preferred route is always going via our website. We have a fantastic website where you can apply directly.
Great. What about you, Pierre, if there's VCs who want to hear more about selling to corporates? Or, of course, if there's founders that are in scope for you, what's the best way of getting in touch with you or your team?
Email me.
Super. What about you, Christine?
Yeah, if you're ready to apply via our website, there's an address there, or if you just want to chat, then reach out to myself or the team, and we're always happy to talk.
Great, very transparent. And for me, best way to reach out to us and hear a bit more about the programs we're running is just on LinkedIn, and my email is on there. We've got 15 seconds left. I think we've managed to just finish on time. I'd like to thank the panelists for a great conversation, and we'll be hanging around at the end if there's any more questions. Thank you very much.